Today I'm going to be talking about the different types of automated trading options that are on the market, just different types of bots. Now I'm sure I'm not going to cover every single bot on the market, but these are sort of the biggest general ones, and hopefully this will help you guys maybe think of a strategy that you haven't tried before, or if you are a programmer, maybe you can develop one of these bots for yourself, or you can hire someone to make one for you. So anyways guys, let's get right into the video, but before we get into it, I just want to take a quick look at Bitcoin here. We did see the breakout on Bitcoin that I did talk about in my previous video, and then we did see the sell-off here. In my opinion, that is because there were a lot of people that knew this breakout would happen, and therefore there was a lot of sell pressure after it did end up breaking out. Also, we did see this double top, so that probably contributed to it too. But, you know, I'm certainly happy that we finally broke this downtrend wedge upwards. You know, that's very, very positive. We also had this head and shoulders right here. So we had this pattern, which then led to the breakout. And we also have this longer term pattern that could be forming here, where we could have, you know, more of a longer term head and shoulders. It's not really fully developed yet, but, you know, we could see something like this, which would be very interesting. There's lots of possibilities for this next move. I'm personally still looking for an uptrending Bitcoin since we did break this wedge. Very positive. Anyways, let's get right into the video and the different types of trading bots. So the first two I'm going to go over require a better connection to the markets, meaning that people who have stronger Wi-Fi, who maybe live closer to the exchange servers, will have an advantage to the people who do not. So these two types of bots are called arbitrage bots and market making bots. So these tend to be the lowest risk trade bots, but also sometimes the lowest amount of profit, since you really are just skimming through the market to make profit. So let me talk about arbitrage bots. So normally, whenever you think of arbitrage, that means trading between exchanges, so you're taking advantage of the price difference between exchanges. Now that is possible, but with cryptocurrency, you guys can know that is pretty inconvenient, as some exchanges have a certain number of confirmations it needs before it's deposited, or sometimes it can generally just take a little while before the funds get deposited onto an exchange. So generally, I tend to stay away from actual inter-exchange arbitrage. But there is this thing called triangular arbitrage, which means if you're on an exchange with a bunch of pairs, so for example, if you're on Binance, they have Bitcoin, Ethereum, and USD Tether, so you have a bunch of trading pairs, a bunch of possibilities and differences in price. What you can do is, for example, you can buy ADA to Bitcoin. So it sees a price difference, it buys ADA to Bitcoin, then it goes to Ethereum, and then it sells the ADA for Ethereum, and then it sells the Ethereum for more Bitcoin. So what you're doing is you're taking advantage in the price of ADA to Bitcoin and ADA to Ethereum, and then doing a triangular arbitrage, so trading between those two pairs to make the profit, and then selling back to your initial coin pair, so that would be Bitcoin in this case, to take advantage of those profits. So that is a very, very cool strategy that can be very, very useful on exchanges that have a wide variety of different trading pairs and base pairs to trade from. So, you know, USD Tether, Ethereum, Bitcoin, those are all great ones to do it with. Obviously, if you are doing it on higher volume pairs such as Bitcoin, there will be more competition, which is why it can benefit you if you do live closer to the servers or have better connection to the servers, because then you can execute trades faster and make more profits from it. So that's why this category is a little bit different from the other ones. Next, we have market making. So what market making is taking advantage in the price difference between two coins. So for example, right here on Ripple, we can see that people are buying it for this price and selling it for this slightly higher price. So you can see there's a spread or difference in price between buying and selling, which people can make profit from. So sadly on Binance, there's actually a takers and makers fee, meaning if you put a limit order, you will still get feed on Binance as far as I know. But on other exchanges such as GDAX, they have a 0% fee for limit orders, which can be super, super useful because then you can take advantage in the price and make profits from that. But personally, I'm not a fan of market making. I think it requires too much speed. There's a ton of competition from different market makers. So although some people, really, really love market making for some reason, I would definitely not try to do it because you probably will not be successful doing it. And there also really isn't that much profit in market making. But arbitrage is certainly something you can try, especially same exchange arbitrage between different pairs. Now let's get into the normal trade bots, so trade bots that don't require any extra better connection. So the first one I'm going to talk about is a micro profit trade bot. So some of the benefits to micro profit trade bots is that micro profit tends to be able to make profit off of a lot of the smaller moves in the market. So maybe small variations in price. It's not really in it for the long run. It's just in it to scalp some profits off of the short term. So obviously some of the benefits to that can be a high volume of trades, maybe initially some good profit, but the downside to it is since you are trading on such a low time frame, in order to get those micro profits, you can get some bad buys, which can then lead to bags or stop loss hits. So micro profit is definitely a delicate balance between only running it when the market is really ready to be scalped from. So for example, maybe right here you'd want to run it, but then once it starts to drop, this is where you can get a bag, or you can just lose all the profits that you made making small trades on the way up. So micro profit is risky, it's harder to execute, but there's certainly people who do it well. So I would experiment with that a little bit, but these next two are the ones that I'm personally more a fan of. So next we have long-term trades. So these are probably trend-based trades, something based on a variety of indicators, normally on a longer time frame, to make more profit off of the market on the long term. So whenever you're doing these trades, it does not require any superior connection of any sort, because you're really in it for the long run. So you would have bought down here, and then it would have sold up here once it detects a trend change. There are lots of amazing trading view scripts for that. But overall, long-term trades tend to be easier to execute from and don't have a lot of the risk that some of these other strategies have. So personally, that's why I'm a fan of it, especially in these super volatile cryptocurrency markets. You can spend a lot of time trying to get the micro profits and trying to make 1% trades a day. But why would you try to make 1% trades a day when you can just make 50% in 1 week just holding a coin and then selling it, with longer term trades? So I personally really like longer term trades for cryptocurrency, and it's easier to execute with trade bots. Next, this is another strategy that I really love. It's also sort of a scalping strategy of sorts. But what it does is a scalping strategy that I'm talking about is a strategy where you have very, very specific buy criteria. So you have maybe a very, very specific amount that you want the RSI to be at. So the RSI has to be below 25. The stock RSI has to be below 20. The EMA has to be bullish. So you have a bunch of criteria that has to be positive in order for it to buy. So what this does is it makes it so it only buys in a very specific situation where most of the time it's going to end in profit. So you want to find a combination of settings that really work well in finding a point where it buys at the bottom most likely. So maybe you have a criteria that makes it buy only at bottoms that are super sharp down like this. So then maybe it would have bought here, it would have bought here. As you can see, once you find those settings, it can be very, very good. And then all you do, instead of trying to make profit off of those longer term moves and being riskier and waiting for it to go down, you just find these little zones with your criteria, and then you sell for 1% profit or 0.5% profit every time, meaning that this strategy is very consistent. And although you aren't making profit off of the entire market, you're just scalping little bits off of the market, little recoveries from these drop points. And then you're doing that on a large scale of pairs. So you have this very specific strategy. Maybe you're only getting one buy on Bitcoin per week, right? So you're not doing that many trades. But once you start to spread that across 100 cryptocurrency pairs on Binance, for example, then the profits can really start to add up because you're getting very, very minimal bags since you have a very specific strategy that works most of the time. And if it doesn't work, you can just put a stop loss. And then you're getting those buy points and those 1% profits every single time, which is, I think, is a strategy that's very, very cool, and one that I'm personally trying to implement right now, because I believe if I am able to do that, then I will be able to have a much better passive income situation, where I'm not trying to depend on the markets as much as I do right now, especially with Bitcoin being so volatile. So anyways, guys, just a quick recap. We have arbitrage bots, micro profit, long-term trades, specific buy points for low profit or scalping, so that's one I just talked about, and market making. Those are the basic bots, the ones that I would recommend for cryptocurrency. That's what everyone's trying to achieve. They can all be profitable if you do execute it well. So hopefully this video has taught you a little bit about trade bots. I'm obviously a huge fan of the automated trading market, and I can't wait to see what else comes in the future. Obviously, we do have the whole situation of AI and more advanced trading techniques that could come as time goes. But for now, we have these strategies which have been making people, millions and millions of dollars for the past few years. So anyways, guys, thank you guys so much for watching, and see you guys in the next video.